Welcome back to another video with the Wallstreet Wolves. Today we're covering up a very important topic that both beginner and experienced traders could benefit from. But first, we gotta hit you with the intro. Alright, so today we're going to be talking about our support and resistance levels. Basically, we got a couple slides here and then we'll go over some examples on the charts. But first, we got to cover up a couple things that you guys should know. To start off, we're going to talk about what our support and resistance levels are. Basically, your support level is a level where prices stop falling and bounces back up. If you look at this picture to the right, our green dotted line represents our support level. Our resistance level is a level where prices stop rising and begins to fall back down. Pretty simple, right? Right here you can see the red dotted line is our resistance level. Pretty simple. And I promise these slides aren't gonna take too long. I only got like 4 or 5 slides to talk about, and then we'll go over some examples. We're gonna cover up the 3 types of support and resistance levels. The first one being our key levels. Our key levels are basically a level where prices have shown the most reaction to. You look at this picture to the right, image 1. Our resistance is the red line, our support is the green line. You can see not was the resistance tested once, not twice, but 3 times, making this a strong resistance level. And our support was tested 1, 2, 3, 4, 5 times, making this a very strong support level. The second type of support and resistance level is our trend lines. So these are your uptrend or downtrend channels where the top level of the channel is your resistance and the bottom level is your support. Take a look at image 2. On this uptrend channel, our top level is a resistance, bringing prices down. Our bottom level is support, bringing prices up. And you can see it touch resistance right here again, and pretty much just rises back up after getting close to our support. Same thing with the downtrend channel. Our top level is the resistance and our bottom level is support. Pretty simple so far. I promise, guys, I hate slides too. We're gonna get over this as fast as possible. The last type of support and resistance level is our indicators. You know, your tools like the Fibonacci, the VWAP, moving averages, and whatever other tool you like to use on Tradingview could be used as your support or resistance level as well. So for example, we have the 50 exponential moving average right here, the blue line. Right here, it acts as a resistance not once, not twice, not 3 times, but 4 times. And if it was the other way around, where candles are trading above this moving average, it would most likely act as a support level, bouncing off of the moving average. All right, so a good thing to know about our support and resistance levels are that it can often switch roles as these levels break. So for example, when prices break above a resistance level, it will typically come back down and test that same level and will begin to act as a support in the future. Vice versa, when prices break below a support level, we would see the same support level act as a resistance in the future. So that's actually something you guys should memorize and always remember. Just keep it in the back of your head. Trust me. All right, so 2 ways to trade the breakout of a support or resistance level. The first being trading the initial break above or below support or resistance. What are the pros of trading this way, trading the initial break? Well, the pros are you get a better entry point, you get more trading opportunities, and your profits tend to be bigger. What are the cons? It's a riskier entry, and your chances of getting in false breakouts increase a lot. You're gonna see that multiple times in our examples after we finish these slides. The second way you can trade breakouts are trading the pullback or the retest after a break above or below a support or resistance level. What are the pros of trading the pullback or the retest? Well, 1, you'll avoid trading the false breakouts, which is very important. We'll go over that later in the examples. And you'll also get better confirmations of a continued move to the upside or the downside. What are the cons of trading the pullback? Well, you'll miss some buying opportunities if like no pullback happens, right? And you'll get less of a bigger profit depending where the pullback happens, if it happens. All right, so this is the last slide right here. Quick little summary. Traders should look at support and resistance levels like barriers, where if you see prices begin to break above or below these barriers, you could possibly find yourself setting up to get in on a trade. Vice versa, if you see resistance rejecting or support levels begin to hold, you could also find trading opportunities. Always use extra confirmations, confluences when deciding to enter trades based off a support or resistance level. For example, you can use your candlestick patterns, you can use your indicators. There's so much that you can use as a confluence to your trades. The more confirmations or confluences you have, the probability of you winning your trade dramatically increases. I'm telling you guys, the more confirmations you have when you buy in on a trade, the more likely you'll win that trade. I think that is the last slide, so let's get over to the charts. We'll go over those 3 different type of support and resistance levels. I'll show you guys how you can, buy the breakout. I'll show you guys how you can buy if support begins to hold, and I'll show you guys how to buy when resistance begins to reject. Thank you guys for sticking through this with me. Now let's go to the charts. All right, so right here we have a clean chart. We have the SPY open, no indicators, nothing, just a plain chart. For beginners, I do want to go over how to draw your support and resistance levels. I'm gonna make this quick and simple. So what I would typically do is zoom out, not too far to where you can't even see your candles anymore, but just enough so that it is still visible. Your candles are still visible to you. You can still tell which candles are green and which candles are red. So right here for me would be good enough. The next thing I would do to spot the most obvious support and resistance levels is to open up my line chart. You can go ahead and use your line tool right here on the left side of the screen and just touch as many obvious points as possible. So right here we got an obvious point right there. I draw a level there. I will draw a level right here. I will draw another one right here. One more right here. Matter of fact, I'll draw one more right here. Okay, after you've got your most obvious points out the way, go ahead and go back to your candlestick chart and try to connect these levels to where it can touch as many candle wicks or candles as possible. So for example, you see this support right here touching multiple wicks and candles over here, touching multiple wicks over here, candles and wicks over here, and over here. So this is pretty accurate right there. You can also do the same for all the other levels. So right here we have these candles, these candle wicks right here, and candle wicks right there. Same thing for this level. Connect it to as many candle wicks and candles as possible. Same thing down here. We got these over here, and this right here, and this last level over here. You see that this is the daily chart. You can also use this on any other chart. So now let's go on the hourly chart and do the same thing. Zoom out to where you can still tell that your candles are red or green, but don't go too far where you can't even tell what color the candles are. All right, open up your line chart again, spot the most obvious points. Go back to your candlestick chart, connect it to as many candle wicks and candles as possible. Look at all these wicks and candles. Same thing with this one. Look how prices react to these support and resistance levels. Very clean. One extra thing that you want to remember when drawing these support and resistance levels is that a support or a resistance isn't just one single number. So let's say 393 over here. You don't want to focus on just 393 itself. So a resistance or support level is a level. It's an area where prices reacted to the most, not just one single number. So you can go ahead and draw a box and try to touch as many candle wicks or candles as possible. Again, I'm so sorry, I missed one level right here. Now this is how I would drop my support and resistance levels on any time frame. So again, first thing you want to do, zoom out, open up your line chart, find your most obvious points, go back to your candlestick charts, set those levels to where it touches the most candlesticks and candles, and then draw your box surrounding those levels so that when prices go and get near those levels, you can look for an opportunity to buy or sell. Now that we know how to draw our support and resistance levels, let's go and show you guys some examples of how you can execute on trades using these levels. All right, so we got Amazon pulled up right here. We're gonna look for another example on how you can buy or sell a trade using these support and resistance levels. So right here we see prices have broken above this 110 resistance level, came back down, held as support. You could have bought right here as we see a bullish engulfing on the 9 moving average. Put your stop loss below this support, aim for this next major resistance level, and you would have already seen profit within hours. But since that already happened, we're gonna look for trading opportunities as prices come up to this, 114 to 114.50 resistance level. Okay, so right here you see prices now trading at 114, 114.50. We can look for two things. We can look for a break above this resistance level to buy Amazon and aim for 118, or we can wait for rejections to occur and trade this to the downside. Now, how can you trade Amazon as prices go down? Well, there's something called options trading, which is what we like to focus on. Something called puts. You are betting that prices will go down. Let's see what happens with Amazon here. So right here, what do we see? We see a huge bearish engulfing candle. Now, again, that is a confirmation that prices are about to fall down. So with options trading, you have the power to make profit as prices go down. Over here, you could potentially buy puts and aim for this major support level right here. All right, so instantly you see a huge sell-off as markets opened. Everybody's seen this bearish engulfing candle as prices rejected this major resistance level at 114.50, and boom, instantly within 30 minutes of trading, within 30 minutes of market opening, you've already hit your target. Now what could you do over here? You could do one of two things. You could either sell your profits and secure all your profits, or you can look for a continued move to the downside and potentially hold your trade to 108, the next major support level. All right, so let's say you want to hold some runners, hold some positions so that you can possibly find prices going down to 108. What you would want to do is move your stop loss to either break even, or what I would personally do in this situation is move my stop loss to where I can still profit even if my runners go back up. This is how my trade would look like now. Let's see what happens. Holding as support just a bit, and right here you see another confirmation that prices could continue to fall to the downside. Prices came down and broke, came back up, tested as resistance, and now you have a bearish engulfing. So now you have another opportunity to buy more puts. What you could do is buy more positions as this candle closes. I'd put my stop loss right here above the 50 MA. I'd take my older positions that we had opened up over here at 113 and move that stop loss to the same stop loss as this new position over here. And now you have more positions over here with your older positions that you already had running at 113. Let's see what happens. And boom, another bearish engulfing candle. And just like that, you reach your profit target. So you caught this entire move when markets opened all the way until 1 p.m. You caught a $5 move to the downside. Again, how can you profit as prices go down? Options trading. So this is another example of how to use support and resistances to buy or sell trades. Now that we've got this covered, let's go over some trendline examples and how we can use those trend lines as support and resistance levels. All right, so for this part of the video, we're going over some examples on how you can execute on trades using our uptrend or downtrend channels. I don't want to go over too much on how uptrends or downtrends work. I'll make another video separate from this to go over that if you guys want. In this scenario, I can see that prices are going down. How can I validate that this is a proper downtrend? So you'd want to look for lower highs and lower lows. So now that we've identified that prices are most certainly creating lower highs and creating lower lows, we can validate that Uber is on a downtrend. Now that we know prices are on a downtrend, how would we draw our downtrend channel? So first thing I would do is grab your trend line tool to the left. I would connect our swing highs to as many candle wicks as possible. So in this case, you can see we have 1, 2, 3, 4, 5, 6 candle wicks rejecting off of our swing highs. I would go ahead and clone this trend line and connect it to the bottom channel. Now you can go ahead and adjust it to where you can touch as many candle wicks as possible again. So in this case, we'd be touching 1, 2, 3, 4, 5, 6, 7, 8 candle wicks on our bottom level of this downtrend channel. Again, how can we validate that this is a proper downtrend? We have our lower highs being created and we have our lower lows being created. You can also call these our swing highs and you can call these our swing lows. Now, how can we buy or sell using these support and resistance levels on a downtrend channel? So one thing you guys want to remember for sure is that the trend is your friend. What does that mean? If a market is trending to the bottom, you'd be wanting to look to short Uber. If Uber was trending to the upside, you would want to go look for opportunities to go long on Uber. So in this case, we are on a bearish trend. We would want to look to short this. So instead of looking for bullish opportunities, we're going to look for opportunities to go short on Uber. What you would want to look for is this top level of your trend channel to be tested as resistance with an extra confirmation that prices are about to fall back down. Okay, so right here we see a major rejection off of the top level, aka our resistance level on our downtrend. Now you can say this is a really bearish move. Did we miss our entry, or how could we actually execute better on this trade if we're shorting it to the downside? What I would tell you is to go on a lower time frame and look for an opportunity to buy before a major move was made. So in this case, we are on the hourly chart. Remember, every candle represents 1 hour of price action on the hourly, and on the daily, every candle represents 1 day of price action. So in this case, this big bearish candle represented the entire day of how the market went, for Uber at least. But if you were to go on the hourly chart with Uber and find a better entry point for yourself to go short, you could see that prices started rejecting our downtrend channel, and we spotted a bearish engulfing with another confirmation that prices started trading below our 9 moving average. So that's 3 confirmations total that you have telling you that prices are about to fall back down. So again, what did we just do right here? We were on the daily chart, right? We were waiting for prices to come back up to test this level of resistance on our downtrend. We went to the hourly chart to find a better entry. We found confirmations over here after this candle closed. You could have entered on shorts, or you could have entered on puts, options trading. Put your stop loss right above this candle wick high and go back on your daily chart to find where your profit target is most suited at. So in this scenario, I would aim for our swing lows, our most recent swing lows. Now let's see what happens with Uber after it rejected this level of resistance. And boom, prices drive right down to our swing lows. Now you can do one of 2 things from here. You can wait for prices to break down here and break these swing lows to create another swing low, giving you another opportunity to go short or buy puts, or you can just take your profits. All right, so that is it for this video. We did not want to make this too long, but we do hope you guys learned something. And if you guys want us to continue to make these educational trading videos, make sure you give this video a thumbs up and leave a comment down below on what you want to see next.